Welcome home. This is Leo Kane with Beryl Engineering and Inspection, bringing in you an exciting hour of Tampa Home Talk. Right, Adam?
Yes. It's exciting. I'm excited. I'm here.
Don't mess with my grammar there. I know you were like looking around at my grammar.
I was doing it in my head, and
I'm a numbers
it was a
guy.
sentence. It was a sentence.
I'm a numbers guy. What about you, Katrina?
We'll
Are you a
give you a
numbers
pass.
lady?
Yeah, and I'm flying in sideways. I'm your host this morning. Welcome. This is Tampa Home Talk.
I watched a
Leo
whole
said.
movie about drifting, and that's flying in sideways.
Really?
Yeah.
You don't say. I've never seen that.
That came out like in
Shocker.
2006.
You're talking about Tokyo Drift?
Of course.
Oh, actually, I did see the Fast and Furious. What are we talking about?
Yes, that's
How
what we're
many?
talking
Yeah, that's kind of how it felt this morning.
How many of the 12 Fast and Furious movies have you seen?
I don't know. They all kind of blend together.
I
I'm
think
not
I've seen
sure.
the first one.
I've seen 4 and 2 spin-offs.
I saw whatever my husband and my kids put on. I don't know.
They're so much fun. They get more and more unbelievable.
They
You know
are.
what else-
Family.
Very family. You know what else is unbelievable? I'm looking at the number of new listings, and we are at a year high right now.
Ooh, are we now?
Mm-hmm.
Yeah.
Look at that.
Yeah, a year high. And April is a busy month. It is a very
Yeah.
busy month for April for real estate as people ramp up thinking, hey, we're going to list our house now. We're going to sell it because the kiddies are out of school, and we're going to move from point A to point B.
Look what else is really high.
Pendings.
Yeah, it's the
Pendings
highest
are through
this
the
year.
roof. They're like chimneys.
Interest rates.
And interest rates.
Actually, rates are down a little, and Sarah Crickey's going to be coming on this morning to talk about that and some other crazy stuff that's in the news.
I have some information.
She's actually on now.
Yeah, she's
She
parked.
is.
She's parked, speakered, and mute.
Real quick run through these. So sold 771. So right, we're still strong.
We're
really strong
This
market.
is a strong market.
All right. So let's just hop on Sarah Crickey because I know she's got to fly around 9:30. She's trying to get some of our files out.
Loop the deals, right? Gotta
Yes,
get it
that
done.
are going to be closing. So, Sarah, welcome to the show. And as you know, I brought you on because there's been a lot of stuff in the news this week with the mainstream media around. If you guys didn't see this or pay attention to it or heard anyone talking about it, they have spun it to where they say the people with higher credit scores are getting a worse deal than people with lower credit scores.
Some of the media has a lot of negative framing around some of the changes that are taking place May 1st, and it's not all a positive change, but there are some positive aspects to it. So I was going to kind of break that down for you guys. But before I do, I wanted to chime in just a little for a quick minute about credit pulls. So a lot of clients that we talk to and pre-qualify are leery of having a hard inquiry on their credit.
Mm-hmm.
Some folks, because maybe they're not shopping to actually purchase for 6 months, and they don't want multiple pulls. Others feel like it's going to drop their score. Others have credit concerns, where maybe there's some derogatory credit that they're worried about.
Well, I've heard that if you pull credit, you can lose anywhere from 5 to 10 points off your score. Is that a myth or is that a fact?
It depends.
And the back-to-back credit pulls, too. Sarah, talk about that, too, while you're on that subject. Talk about the back-to-back, like, mortgage and auto inquiries. Yeah, okay.
So to answer you properly, it really depends. I mean, all consumers should have the right to shop interest rates. It's really hard to shop the interest rate from one lender to the next if they don't know your credit score. So when you have a concentrated number of inquiries for the same purpose in a concentrated period of time, it really should have no adverse impact. If you're running around town and you're pre-qualifying for a mortgage, and then you're at a car dealership, and then you try to pull a department store credit card, and you're trying to extend credit for multiple different purposes, then absolutely it can have an impact on score. The really cool thing that we can do now is, and here's the thing, and this does happen, it's very common behind the scenes, when someone does say, okay, yeah, pull my credit, and let's work on what I qualify for, that's a hard inquiry on their credit. And behind the scenes, this information is sold. Not the actual credit report, but the fact that credit was pulled for the purpose of a mortgage. So people get their credit pulled, and then they get bombarded with solicitation from mortgage companies, etc., saying, hey, we think you're shopping. We'd like to help you. And again, they can't see the actual credit report, but they know that this person is actively shopping because they've had a credit pull. So now we have a way around that with a soft credit pull. So a soft credit pull is not an inquiry on the credit. It will allow us to see what we're working with so that we can price their loan properly, which is what we're going to talk about next. And once we do that, in a soft pull, they'll actually receive links where they can opt out so that when it is time to do that hard inquiry, that information does not get sold at that point, and they are protected from being solicited. So soft pull is great for a lot of reasons. It will obviously avoid the hard inquiry at that moment. It'll allow us to work on any type of credit challenge. And for folks that don't have a credit challenge, it will allow us to dial in the interest rate and the debt ratio and budget a lot more accurately. So I just wanted to mention that that's kind of a newer thing, and we're really excited about being able to do that for clients.
Yeah, I mean, that's good that you guys are able to do that. Adam, I think you guys do something similar, right? Don't you guys do a soft pull that's not a hard inquiry for insurance?
Most homeowners and every auto carrier does that, yeah. So they'll do it's a soft hit.
And that has no impact on the score?
Yeah, it doesn't show me a score, it doesn't affect the score, just runs in the background.
What about, speaking of running in the background, my credit card gives me a monthly FICO credit score. Is that garbage? Is that real?
Probably same deal, though, as far as the soft hit.
I'll tell you because I've been watching my own credit score like a hawk right now, and I had Sarah pull mine, last month? Mm-hmm. And it was about a 50-point difference. Like what Credit Karma showed me, hers was about 50 points less.
Oh.
No.
Yeah.
For example, you're getting a raw generic score on your credit cards and your Credit Karmas. You know, when lenders pull a credit report, they're pulling a tri-merge. So it's Equifax, Experian, TransUnion, all in one file. Car dealerships, for example, typically use Equifax for a credit pull. I could pull an Equifax score and it would be completely different than if you walk in a car dealership and they pulled your credit for the purpose of the application of credit. So it's a great guide because those types of systems will alert you, hey, something changed on your credit file, or something positive or something negative happened. But it's definitely not the score that you would want to rely on for qualifying.
Yeah.
purposes.
They're never the same. When they pull mortgage, they're always less. Always.
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 I don't have a good number to begin with because I'm a phantom. So you're saying the number is actually less than what my credit card's
If you're a
telling me?
phantom, then you just wouldn't have a score at all.
You have a credit card, you're not
No
a phantom.
score.
I'm basically a phantom. I can't get any loans or anything. I
Sad.
own nothing.
Well, there's ways to fix that.
Be surprised.
I own nothing, Sarah. Absolutely nothing. And I don't. And I pay cash when I do need to buy something.
Smart man.
Way to go, but we have all kinds of creative ways to help with that.
The interesting thing is, when you don't have a score, it actually affects insurance too, right? The rates you pay. We see that, and then also on the mortgage side, like if you pull credit and there's no score, it's not zero. There's just nothing there. Where a score would be, you will pay a higher rate.
It's kind of a guilty until proven innocent standpoint because I would never miss a payment if I had a payment, but because I've never had payments, they don't know if I'll never miss a payment.
Right. Yep, you're right.
The good news on the insurance side is that Citizens doesn't take it to an account. So considering that's where most people are going these days, they're not as affected as they used to be.
So, Sarah, what's the deal with all this stuff in the media that's saying, people with higher credit rates are going to have, basically they're going to give people a better rate if they have a lower score? Because that's not entirely true.
Well, and here's the thing. It's going to be specific to every single buyer's different situation. What is happening is Fannie Mae and Freddie Mac are changing what are called LLPAs. Those are loan level price adjustments. And basically that's a calculation behind the scenes that determines the interest rate and or if there is a cost to the interest rate for everyone, depending on their credit score, depending on their loan to value. And so these are what I will call pricing hits that worsen the pricing so that we can compute a rate that either has no cost associated with it, meaning no points, or has a cost associated with it, depending on what the borrower's looking for.
And Sarah, we're going to talk about that as soon as we come back, because we've seen some recent changes this year since all the craziness has happened in the market. And if you've got specific questions around this, would highly encourage you to call or text us so you can get connected with Sarah. 813-377-2775. Again, our off-air number is 813-377-2775. We'll be right back with Sarah Cookie at the Mortgage Firm.
Welcome home. This is Leo Kane with Tampa Home Talk, bringing in exciting segment number 2, where we have Sarah scaring you about credit reports and mortgage rates.
Well, it's all over all the news channels, literally.
Really? Because the only thing I'm seeing in the real estate market right now on the news channels is the fact that Disney is moving to Georgia.
Well, yeah, I've heard about that too.
And I don't think that's possible, but
We can't really.
I don't think with the investment they've made infrastructure-wise that it's feasible to just pick it up and move it.
Yeah.
Having personally seen the foundation supports for several of the rides, like from an engineering plan standpoint, it's not like something you can just put on a trailer and move.
Right.
It's not like a fair ride, right?
Yeah.
It's not like a fair ride.
I doubt they're moving to Georgia, folks, if that's helpful.
Yeah.
Yeah, they just need to resolve this feud. Like, let's just get it over with. Like,
So what's the deal with the poor credit scores getting a better rate and the high credit scores paying more, Sarah? What's
where's this
going on
rumor?
there?
I think she probably should back up and talk about like some of the crazy pricing we've seen since rates have jumped. That's probably a better place to start, don't you think, Sarah?
Yeah. So this basically, from a conventional lending standpoint, it is going to help some lower score borrowers. When I say lower score, I'm not saying 500 credit score. I'm saying your 660 credit score, your 680 credit score. You know, those folks were cut out of the market in terms of having reasonable conventional pricing for quite a while. And so the adjustments for these folks were relaxed a little so that more borrowers could qualify. Okay, so and that, you know, that's the reason for that. They've also added another tier for higher credit scores. So instead of 740, there's another tier for positive adjustment, 760, and even over 780.
Mm-hmm.
So those are some good things. But yes, the adjustments are a little wonky, and it's really going to, it's hard to quote math in a specific scenario simply because it's going to be different for everyone. For example, someone that comes in with a 780 credit score and is prepared. They've saved their down payment, etc. The adjustment, this loan level price adjustment for their score with a 20% down payment is going to be about 0.25% higher than if they only put 5% down. And, you know, most folks try to come in with that 20% down payment, avoid the PMI. They feel like that's going to bring the better interest rate. They have the higher credit score. In some cases, for folks with higher credit scores, the pricing will be a little better with less down. But really, honestly, it's not a huge swing. I looked at a few pricing scenarios yesterday, and for some folks, it was super minor. It was 0.1%. It was negligible to the rate, or it was just a very minor cost. For folks with lower credit scores, you know, it's going to improve for them because they're trying to expand the capacity of lending to lower scores. The one thing I want to point out about these loan level price adjustments is that there are waivers where you can qualify for a waiver of the adjustment altogether in terms of how your interest rate is computed. For example, with Fannie Mae, if you are in their Home Ready loan program, you are exempt from these new adjustments. Their Home Ready program is designed for first-time home buyers, and it does have an income cap. Folks cannot earn over $65,680 in our immediate area. Their income calculation changes from one area to the next, but that is what it is for ours.
That brings me to a question.
Scenario where you can be exempt from these adjustments in your interest rate is if you're a first-time home buyer with a qualifying income that's less than what's called 100% of area median income. Area median income is just the area's median income average. And in our market, our immediate market, that is $82,100. So you may make too much money for the Home Ready program, but if you make less than $82,100 and you are a first-time home buyer, you're exempt from these waivers. So who is considered a first-time home buyer? That is someone that hasn't owned a home for 3 years. And it also includes maybe a divorce situation where we now have a single parent that was previously on deed with an ex-spouse, and now they're trying to purchase their own home. Those folks will qualify as well. Manufactured homes are going to qualify for these adjustments. And let's say someone's making more than $82,100 a year because maybe they get bonus or maybe they get overtime. And we don't need that extra income to actually qualify the loan. We only need the base income, and the base income's under $82,100. That person's going to qualify, even if they're making over $82,000. Okay. So there are all kinds of calculations that go into that. The key to what I'm explaining to you, the most important thing, is that we want to get our soft credit pull or our hard credit pull. We want to get the score dialed in. We want to understand the income completely and qualify that income up front. And obviously, if they qualify as a first-time home buyer at all, so that we can get all of that information dialed in specifically. That way, when we're quoting interest rates, if they're eligible for the waivers, they're going to get them. I have a feeling if lenders aren't doing this, they're going to be quoting interest rates that are going to be very different, or they're going to be quoting an interest rate expecting a waiver that maybe they find out later they don't get, and vice versa. So the key is to get that stuff dialed in up front and know where you stand interest rate wise, that what you're eligible for and what you're not with these upcoming changes.
I think there's going to be some surprises on down the road as people are in the middle of a transaction. But I know Leo had a question on something you were talking about.
Yeah. So earlier you said that one of these programs is if your income was $62,500 for the year. Is that household or individual?
$680, yeah.
Is that individual or combined?
That's
Household.
qualifying income for the person on the loan.
Okay, so now I'm making $62,500 with a 680 credit score. What is that going to qualify me for an average price of the home I can look for?
Again, it's going to depend on the interest rate and your down payment. If you're trying to go in, those programs are designed for first-time home buyers.
Right.
So they have down payments as low as 3%. So depending on the moving parts of the insurance, HOA, flood, real estate taxes, I'd probably start you without debt, in at least a $300,000 house point or price point, and go from there. But obviously the escrows of insurance, tax, and all of that good stuff are moving parts that have an immediate impact on it.
So now
you can't buy much for that.
Yeah, now I have a follow-up question. So if you're telling me that if you are a first-time home buyer with a $62,500 income, you're looking around $300,000 for a house for them, but the median sales price in this area is $400,000.
Sure. So
Well, they're also below the median, income too. So
the system giving an automated approval, the debt ratio with an automated approval can be as high as 50%.
Oh.
So based upon the income cap, assuming no other debt, that's $2,708 in total. Now, it's highly unlikely that would be an automated accept because the housing ratio would be 50%. There are two types of ratios that are formulated, a housing ratio and then what they call a back-end ratio, which includes all other debts like a car payment or a credit card, etc. So it's really about finessing that system, if it likes the credit, the situation, if there are reserves in the bank. In a lot of cases, we can get an automated approval with higher than guideline ratios. But you are correct. They still have to be able to find a property at that point.
And let's not forget, like before automated underwriting came into play, underwriters used to underwrite based on a 28-36 ratio. So your housing ratio, 28% of your total gross income, and your total debt to income ratio, 36% of your gross
Yeah,
income.
lots of automated approvals with strong credit and other, compensating factors at 46% or 47%. And then we have others that we cannot get approved without additional down payment or reserves or a lower debt ratio. It's really specific to the situation.
It's weird because sometimes she'll run files through automated underwriting for Fannie Mae or Freddie Mac, and one system likes it, the other one doesn't, and there's really no rhyme or reason. I mean, she could get a different client with the same parameters approved in both. It's very strange how it shakes out. My question for you, Sarah, because I know you have to hop off here before the bottom of the hour. I don't know that these higher credit scores are necessarily a higher rate. It's just that there's been significant points and cost associated with borrowing money this year, really. Yeah. And so it's reduced the cost to borrow money. It doesn't mean that they're going to get a worse rate, right? It just means that they're not pounding the people with the lower scores like they have been.
You're exactly correct. And this is a change to the price or the cost of an interest rate. When I looked at it from that perspective yesterday, and priced a few different scenarios out, that change was very minor to the borrower, and it actually improved with less money down, depending on what that person's goal is. But yeah, it's going to be some good news for borrowers that have, which a lot do, average credit scores that are in the 600s, higher 600s.
All right, Sarah, we have to take a break. This is Tampa Home Talk. We'll be right back.
Welcome home. This is Tampa Home Talk. I'm Adam Talley with Talley Insurance. It is our insurance corner of the show here.
Why? Because you feel like your booty's on the grill right now?
It's been living there for the last couple months for sure.
So what the heck? We've got to do something with this insurance market. I literally saw one of my Facebook friends posted on their Facebook feed. They're like, congratulations to all of you that got a free roof. I just got my insurance renewal. It was $11,700.
Ooh, that's a lot.
I did some quick math, and I'm like, remember how I was saying they should just put in a depreciated roof, right? So if you put a brand new roof on and a storm rolls through, obviously you get a brand new roof because you just put it in.
We have some carriers that are going.
But for every year, they should decrease it. It's about 7% on the value of the roof.
They don't do 7%, but there is a sliding scale with the ones that have that option. So there's carriers now that are A, accepting older roofs than they would have normally without it if you do the endorsement, and B, are giving a discount to do the roof schedule instead of the roof at replacement cost.
So what does that look like? And are those options actually affordable? Because, we just redid the insurance on that house I had, and we've redone everything. It's a brand new house, and it was still expensive.
It depends on the carrier as far as what that discount looks like. But, I think that's probably going to be where we go in the future regardless. It might be what we need to do in the future.
We're going to have to do something because these insurance premiums are crazy.
It's not just on the home. It's on auto. It's on commercial property. It's pretty much across the board for the state. I know for myself, my wife and I, we don't have any accidents, don't have any tickets, have good credit. And my auto insurance went from $4,500 to $5,500 for the year. So
ours went up too.
It's pretty bad. It's very common, and now here's where the people are gonna get, with the way that the build prices are going up. Where a lot of people are getting squeezed out on, and I know nobody's sobbing for anybody that's buying a $800,000 house, but those people where their coverage A is over $700,000, which is the Citizens cap. If they don't have a newer roof, now their only option is excess and surplus lines, which has more exclusions than inclusions, I feel, or they'll do things.
Is the coverage at least less, like the cost of insurance?
No,
Since you're
I'm
insuring
writing
less?
one.
And you have to pay tax on it, don't you?
there's taxes and fees that are included, but you still have taxes and fees in your citizens policy or anything else like that. It's just different taxes and stuff. But yeah,
it's got to let up. I mean, I literally just saw where there's this thing
I don't
that
know if it will.
I mean, at some point it has to. Like, Floridians are gonna sort of cry uncle, right? I mean, I saw one of our past clients. I went to a listing appointment yesterday. Their cost of their mortgage payment has went up about 32% from when they bought the home, like a year and a half ago.
Yeah.
Granted, it's new construction and it got reassessed and their CDD fees and all this stuff, but like literally what's happening is these folks they're living off a credit card debt, and then it's just
well, and if it's new construction, insurance isn't going to be.
But it wasn't brand
new.
But yeah, I know what you're saying.
Like the big problem is you get these people. It's maybe the upfront underwriting guidelines were different 5 or 6 years ago, right? So maybe they're with Heritage or they're with Security First, and now they have now they're either getting non-renewed or the premium is doubled, right?
Yeah.
I had one
Quadrupled
I've rewritten quite a few, this week where their renewal premium was $6,000 or $7,000, and they're happily switching to Citizens even though it's $4,000 because it's a $2,000 difference. Doesn't matter,
huge,
right?
yeah.
It doesn't matter. Like I had a guy yesterday. That's what I did, and I had to increase his flood to be compliant with the new Citizens guidelines, and the Citizens plus the flood increase which was an additional $800 on top of his flood policy he already has, still saving $1,500 over his renewal. So, I mean, I have a guy whose auto insurance policy, it's just him and his son. Now there's some accidents, and the son's 19, 20 years old, but $20,000 for the year if they split payments, or $16,000 if he pays it in full. I mean, that's for two drivers. We're not talking some like commercial auto policy with a bunch of cars on there.
It's just a teenager?
Just one teenager and one dad, single dad.
Wow.
Well, if you
Single
have
dad.
accidents,
Single dad, not even.
my son has had 2 accidents, but he's on his own policy.
And they're nice cars. Don't get me
And he's
wrong.
getting canceled.
It's a Sierra 1500 and a Denali, but it's we're not talking like race cars or
Porsche,
anything, right? So it's profound, and I will tell anybody that's listening out there that's looking to shop, regardless who your agent is, make sure you give them a long runway, because I can probably speak for every insurance agent out there and telling you like a 24-hour turnaround time is going to be like on the like fast end.
Wow.
Right now with quotes. So if you need something to get done, start early, because there's only so much time in the day, right? And a lot of it, unfortunately, I mean, here's the other side of it. Citizens rates have gone up.
Yeah.
So now if you're already with Citizens, you're with Citizens for a reason. Where are you switching to? Can't.
I don't have the answer to that. I am not the insurance person.
I mean, I'll tell you the scary thing, and this will be the thing that's going to affect you probably the most, or maybe may not, because you'll get them on the sales. But I think you might see a little bit of an exodus of people from the state because they're
going to be priced out.
Can't afford to live here.
Yeah.
Right? Like, I mean, a normal person can't afford the additional $3,000-$4,000 a year if they're both auto and home double, right?
Yeah.
Right? And
That's
especially
huge.
with all the other economic pressures coming from everything external.
Yeah.
You know, I mean, milk is more, eggs are more, everything's more right now. So then add on something that you have to have because it's required by your mortgage or the state when it comes to auto.
Yeah, I'll keep
Yeah.
my thoughts to myself on why and how I think we got here. But aside from that, there was another report called an Ellis report, which
It's
measures
probably all of the things that you were thinking and all the things that the insurance carriers are saying combined. It's
Maybe.
both. It's both from the bad actors on the carrier side and the bad actors on the other side of it where, you know, things got out of hand.
Well, the government shutdown with the free money, I think, really kind of started it, right? It's what started the flood of people to the state. Mm-hmm. It's what started the flood of people not working. I mean, it's a whole thing. And, you know, I might get some hate mail after the show for that. But I think anytime America was built on the backbone of working people. That's why we've always been so successful. So the minute the government encourages people not to work, it changed our ecosystem.
Been built on the backbone of immigrant working people.
Right. Yeah.
So.
We all started as immigrants. Our ancestors did.
Mm-hmm.
Well, and here's the flip side of it. If you go rent, which you might think in your head, okay, at least this is a fixed cost. I'm not too concerned about it. Try to find something that's big enough to live in for a family that you're renting. That's not $2,500, $3,000 a
Tough on
month.
the landlords too, because you have these families that are in houses that they're comfortable with, and they know they're going to be there for a while. And they're not trashing the house, and now your insurance has gone up,
Do you
and
have to
now
raise
your
it?
property taxes have gone up. You have to decide: do I keep a good tenant, or do I try and push market?
Hopefully in those situations, because we do have quite a few people where they're landlords, that kind of stuff, as yourself, and where they've had the same people living in there for 15 years, right? And they've barely raised it because they like them and they're nice. And I think so long as you're, open with your tenants, you should be fine. Like that's how I would do it. These are my costs, and my costs have gone up, and my profit is not changing.
But think about
the
it.
costs are going up.
A lot of landlords don't have choice. If their insurance costs went up and their taxes went up, they face either increasing their rent or writing a check. And why should they?
Why were they
write
going
a
to
check?
pay for somebody else to live?
Yeah,
right. It's not,
especially
not
when
fair.
it's probably not even market rent. We had those duplexes in South Tampa that were half, or rented for half.
Well,
of what
good.
they
They'll
could
have
be
to double
rented
it
for.
to pay for the flood insurance.
Yeah,
Speaking of duplex.
This is the one thing she didn't have the chance to talk about, but the credit scores have been so high over the last several years. Like literally the median score of people buying is in the 700s. And when you think about
because it had to be, because the people that
It
were
had to
low
be.
didn't qualify,
Right.
or wouldn't get the house.
mid to
right?
600s, or high 600s is not a bad score by any means. It doesn't even mean you have derogatory marks on your credit file, but by today's standards, it's low to buy a house. So
Yeah, I heard that when she said that. I'm like, mid to 600s, like 640. I thought it was good.
yeah, it used to be average. Like 640
Yeah,
wasn't
640,
good. It was low good.
It was low good, but it was
Yeah.
still good.
Not now. Like now, that's like not even hardly high enough to get us a house. So what would happen? Like what we saw before, and it's changed. Obviously, that's why she can't even say I don't even know, because like these charts are so crazy, Leo, and I'll try to break it down for you. But lenders look at pricing, right? So what they do is they put in, all right, here's the credit score, here's the buyer's loan to value, which means how much they're putting down. Now it's factoring in if they're a first-time home buyer or not. So it's changing that stuff. Before it didn't. They just would put all that stuff in, and it would say, all right, their score is a 645. You have an $8,000 cost to the rate. Meaning it costs you $8,000 just to borrow money. So what they've done is they've taken away part of that so that they can incentivize some first-time homeowners to get back into the game. And so when we come back, I'll talk about, in my book, the net worth between a homeowner and a renter, and then the most recent reserve study, which obviously is not in my book. And we'll talk about some open houses we have coming up this weekend. This is Tampa Home Talk. Stick around. We'll be right back.
Welcome home. You're listening to Tampa Home Talk. Leo Kane has an exciting Beryl Project Engineering announcement. Breaking news, we have an open house this weekend. Well, it's a Keller Williams open house, but it's brought to you by Beryl Project Engineering.
Oh, it is?
And this house...
You're sponsoring our open house?
No, I'm sponsoring the announcement of the open house.
What?
And I'm sponsoring the sponsoring of the announcement of the open house.
You guys are
the
so lame.
announcement of the open house is brought to you by Tally Insurance
Exactly.
for all your
Thank you.
insurance needs.
Thank
and
you.
the announcement of the open house is brought to you by Beryl Project Engineering. The open house itself is
You guys are
Keller
lame.
Williams.
You guys are lame.
So this open house, let me tell you that when I saw this listing, the first thing that came to my visual was this lakeside view and the white fence.
Beautiful fence.
Beautiful fence that is between you and a luxurious 4-bedroom, 2.5 bathroom house in Ruskin, 508 19th Street Northwest in Ruskin. It's in Mira-Lago West. It is a beautiful single-family home. And oh my, look at this view.
So let me tell you some good stuff about it. It's on the lake, so it's got a nice water view.
Has a fence.
Yard's fully fenced.
It's got a $60,000 solar system.
It's got solar. It's 5 minutes from the beach.
Why do you need a beach?
Which
you can
beach?
Just walk in the
Like
backyard.
the little one in the, Apollo Beach. There's a little public beach right there. It's still 5 minutes from the beach.
Technically,
It's not
yes.
Clearwater Beach, but it's a little beach.
This home is like
Technically, yes.
super
A
energy
beach.
efficient. It's got a special attic, so it's got an upgrade to keep the attic cool.
When was it built?
Oh, this home was built in
2013.
2013.
And it's 10 years old, because when I look for homes, I want something between 5 and 10 years home.
Mm-hmm.
It's been broken in. You don't have to worry about the new construction.
Got the kinks out.
So one owner.
Yeah, this is one
I
other
sold the
owner.
house brand new when they bought it.
They only went to church on
I
Sundays.
was just going to say that. Yes.
The only one?
Yes,
What?
you only drove it to church on Sundays.
So this is quite the open house. Come see us being Katrina. 508
Actually,
19th
being
Street.
Katrina's daughter. Maddie.
Somebody will be there.
508
Well, we'll be there.
508 19th Street Northwest, Ruskin, Florida. Open house from 11 to 2. Come see this. It's been on the market for less than a week. It is a super energy efficient, super high value, super. I can't say the word
It's also
super
a
enough.
gated community.
Of course, it's got a white fence.
No, it's gated.
Oh, gate
the-
inside a gate.
the
community's gated.
Gateception.
It's gateception. There's so many gates.
You guys are so silly.
Next
It is a great house.
Next up on the listings, we have 1000 West Horatio Street, unit number 229. So if you want to live in a Hyde Park Place 2 condominium unit, this is the unit for you.
Mac Daddy, all upgraded.
This is a 1-1,
Washer dryer in the unit.
which is super awesome. Like when you upgrade from apartment to condo as your first home purchase, you want a washer dryer in your unit. This is 748 square feet. 666 of it is heated, and that's a weird.
I know it
heated
is.
number.
I thought so too. I noticed that. I wasn't going to point it out, but yeah.
I guess now I have to talk about the Evil Dead movie that just came out. It is awesome. It's phenomenal. Movie number 5 in the series. Make sure you check it out.
Oh my gosh.
That's the number.
Back to the regular schedule.
Anyway,
programming.
that's beautiful. It's been completely updated. Everything in it's brand new.
what's
brand-
our
Walking
price per
distance from
square
stuff.
foot in Hyde Park these days?
What's the list price per square foot on that one? Let's see. $450.
450.
Oof.
This one does though. You have to be upfront about this. The average monthly fee for the condo association, is that the monthly fee?
No. Wait.
what's
it
my
should be
monthly
down.
fee?
Look down here. Hold on. Monthly fee is.
Not on here.
Yeah, it is.
We'll need to look into that.
641.
641. Yeah, so that's exactly the number on the front. So
Okay.
your month
They move stuff around all the time.
so your monthly fee on this one is 641. So it's a good price at 300,000. It's not quite the starter because you need to have a little bit of reserve set aside for your monthly dues.
The
But
condo
this
community is strong.
Condo
remember?
community is very strong. This is an awesome location. So if you're looking for a ritzy location with a well-maintained HOA, this is your house.
Well maintained.
Yeah, it's and they're-
Well-maintained from a reserve standpoint.
well, and they're doing a bunch of structural stuff in there, but yeah, it's definitely a really, really good location wise, and you don't have to do anything; it's all ready to go.
So if you want to be within walking place of Cinebistro, so you can check out all these movies I keep talking about, this is the one
They
for
just
you.
reopened Tempanos.
Yes,
right there
they
as
did.
well. You know.
And I frequently do the Sur La Table cooking classes.
And Sweet Green just opened up in Hyde Park Village as well. If you're into bowls and healthy stuff,
And you can
So
get ice cream from several places.
Yes,
So
and,
Hyde Park Village is the walkable community next to this condominium.
well, you guys are a little bit
these days.
excited about the Hyde Park condo.
Well, I'm excited.
It would be more of a pied-à-terre if I wanted to spend time in South Tampa one
Got
week.
it.
If I was a family man, I would be more excited about the Ruskin house with the lake. If
And the fence for the
as a
dog.
non-family man, and I want as little living space as possible in a community that I know has the money to sustain itself, this condo is for me. So this
All right.
1-1 is something I would check out if I was
Good for traveling
if
professionals.
I was 30 to 45 traveling
Yeah.
professional to demographic this. So I'm excited about both of these. And yeah,
All right, Mr. Excitement, a couple final points on what Sarah was talking about earlier. The big thing about this is you want to get your stuff fully approved and underwritten. Otherwise, your pricing will change drastically. Look at some different down payment options because that could also change your pricing. There's a lot of layers with the new loan level price adjustments. So your loan officer really, really, really matters. It's going to help a lot of first-time home buyers, some of the lower level income properties, as well as some slightly lower credit score buyer. So and then there's different things like inherited homes and, displaced homemakers, right, or single parents that didn't have income before, or their solo income. There'll be some really good perks for those guys.
And this is just on new loans, right? New purchases.
It doesn't apply for refinances, if that's what you're asking.
Well, it doesn't apply for people that are still, like, the changes where they were going to decrease it for lower scores and increase it for higher scores. That's only for, like, new loans, not current loans.
Are you talking about a refinance?
No, I'm talking about this chart thing. Maybe I was confused about what you were talking about earlier.
I don't know what you were saying. Are you clear?
I know that I'll be nowhere near a Madewell, but a Madewell will be there at 508 19th Street Northwest in Ruskin from 11 to 2 on Saturday and Sunday.
Do you still make
open houses.
cookies before the open house so the house smells like cookies?
I don't think we do. We do bring snacks and water and things like that.
So if you're
Champagne,
looking,
if it's a nice
looking
house.
to eat snacks and cookies
in the greater Ruskin area.
In the greater Ruskin area while overlooking a beautiful lake, come join us being Katrina, 508 19th Street Northwest in Ruskin,
How do
Florida
they get through
from
the
11
gate?
to 2.
Or will the gate be
Yeah,
open on
how
a
will we get through the
Saturday?
gate? That's
So
good
there's a
information. Good call,
sign.
Adam.
There's a sign right up front, and you just call or text that, and we will give you the access information to get in.
Is it 813-377-2775?
Yeah.
So
it is.
813-377-2775.
Get you some codes.
Will get me codes to get to 508 19th Street Northwest in Ruskin. I feel like that's an escape room almost.
Yeah.
I need codes to get access to
Yes.
the lake.
To the lake, yeah, with the fence.
Oh, this week is so mucked up. On a brighter note, next year is 25 years for me and my hubby being married.
Yay.
May 2nd.
Congrats.
25 years.
Congratulations.
I
Where's the
know.
party?
I don't know. We didn't plan one. We escaped last week. So
Nice.
This is
we just
Tampa
had
Home
ours
Talk.
last weekend. so-
Love where you live, or we're going to fix it. Welcome home.